Alright, so in this video, we're going to be breaking down the myth of the trend line. See, if trend lines work the way they're taught, then every trader with a ruler would be rich. But instead, 95% of the traders lose. Now, that's not coincidence. That's because trend lines are reactive, not predictive, and they lag price. And worse, they trap retail traders into thinking they're safety, when actuality, there's nothing but a bunch of danger there. So in truth, price respects structure, if anything, and that's not even a given, and not your diagonal drawings. So you're gonna have to learn how to read what price is doing and not what you hope it will do, because a line looks clean. So let me break a couple of things down for you. I got a couple of different examples. This is not gonna take us long. So if a trader was even looking at this opportunity right here, yes, there are a couple of winners off of it. First of all, this first one doesn't really count because there's no trend line yet. If he were to come in here and try to enter off that, yes, that's still a small little slight winner, but it's no telling that he would have been able to project targets off there. You don't really get a real opportunity, like when I talked about learn how to read what price is doing, until you get to the third example right here on the same line. Now, I'm not suggesting that you shouldn't trade those two. Now, me, a trader who only takes A+ trades, this one right here is the only one that I would be interested in. Let me explain why. This one right here almost can't lose, because this one sets up with 3-bar reversal confirmation, being bearish engulfing candle, followed by doji candle right here, followed by entry on the third candle, and trigger bar. Okay, that's what's going to allow the trader to project a retest of the high in which it came from, and then continue to ride this trend with extended targets even higher. Okay, even higher for a trade that would look like this. Let me break this down to you. Looking at the retracement, okay, because retracements are what gives your extension. So me looking at this and knowing that that's probably 50%, I'll go ahead and do it anyway, right? So I'll start from the low here to the previous low, the low here to the high wick up here. And like I said, it's probably about 50%. You see the 618 right there. So if I go ahead and bring on the 50, you'll see that we're probably right there. That's a 50% retracement from this low to this high. When you get a 50% retracement, you're usually looking at a 1414 extension. So this is going to help the trader out. As soon as he identifies this right here, he's going to protect himself. He's going to go on the defense. He's not going to let the market destroy him. So his stops are going to be right under the doji right here, which will be the low of this. You could call it structure, but when you're trading the 3-bar reversal, you're pretty much just using the middle candle as your low, or something else going to be close. So that way you're going to have a nice, clean, safe trade. You're not going to get wiped out, zapped out. Objectively, what you want to do is as many times as you can. But back to those targets. Extended targets from the low to the high, looking for the 1414. Again, that's because we had a 50% retracement, and a 50% retracement usually results in a 1414 extension. It's going to allow me to measure from the low to the high using the Fibonacci extension tool, and come back and bring it on the 1414 extension, which is going to be up here. Okay, and to kind of prove that, what I would do is I would use the A to B is equal to CD equal measure move concept, saying that if this is A and this is B, and if we're going to get an equal measure move off of this, A to B being equal to C and D, and I'm targeting the 1414 already, I can see that that is right on target for what we want. Okay, then the traders trade. If I grab the long short tool and he entered at the third bar, and on his trigger bar or confirmation candle, and his stops were really tight right up under that wick, I understand that this already happened, but this is absolutely the way that you set this up. This is the trade that the trader would be looking at, which is in the form of a 5-to-1. Okay, again, your objective, okay, the goal is to do this over and over and over and over again. So that works. So if you notice, the trend line had nothing to do with it, as we didn't even touch the trend line for the most powerful trade in this sequence. Okay, again, these other trades wouldn't have mattered, because he probably, without knowing this, he would not have known what to target. Okay, let's move on to another one. Let's look at euro dollar. Okay, kind of looking at the same type of setup. Notice the trend line here. When it starts here, you do get a bounce off of here. Look, you would have had no trade. The trader would not have had a trade, because the trend line does not, the original trend line never even gets touched again. Look, this stuff is way up here. Okay, so the trend line that he started price action is not even coming down to that trend line, so it would have been waiting all over the place, or he would have started a whole new trend line, which doesn't make sense. But here's the thing, that's not even required, right? Myth of the trend line. That whole thing about that trend line was a myth. It only looks like there's a trend line when nothing was there. There's no structure, there's nothing to support it but this here, what I'm gonna go in and show you right here. We're gonna use the same concept because this is the way you should be approaching this. This is a bearish engulfing candle, followed by a beautiful little doji with upper and lower shadows, followed by a trigger bar that closes beyond it. Okay, trigger and entry bar. Okay, for a trade, I understand this thing went crazy, but targets from the low to the high up here. And looking at that, this is probably another 1414. I usually target the 127, but 1414 extension for the target. Remember, defense first, okay? Defense. That's the only way to stay alive in this game, is to put defense before your offense, and then the other stuff when it comes to risk management, position size and things like that are going to come into play. But entering right here, because now you got absolute confirmation that you're about to absolutely crush this thing, because you can see if you go back and look at my videos how amazing the 3-bar reversal is, and that's why I've incorporated into pretty much all the strategies I use, including my advanced patterns. I won't take them unless they begin with 3-bar confirmation. But even this guy right here is a 1.75, almost a 1-to-1 for a beautiful trade. Trend line, even though a trader looking at that is going to be drawing trend lines all over the place when that's your trade. We're on the daily chart. Trader would have been in that for 2 days and absolutely killed it with almost a 2-to-1 risk versus reward. No telling what he would have been able to do after that. Okay, on to example number 3. We'll look at UJ. Okay, and it's the same thing, rinse and repeat. Notice how, looking at this trend line, there's times where listen, this is not predictive, it's reactive. There's times where you don't even get to touch the trend line. But at this point when it did, okay, at this point when it did, what did you get? Okay, rinse and repeat. So let's jump right into it. Okay, bearish engulfing candle. I mean, it would be great if I had examples going the other way, but for now we're just going to focus on these bullish trend lines. Bearish engulfing candle followed by doji. I wish this one was better, but it does have a small upper shadow, small body, lower shadow. This one is kind of funky, but it is indeed a doji, more of a hammer candle if anything, followed by trigger bar and entry candle closing above it. Okay, perfect 3-bar reversal entry. And what that will allow the traders to do is come to the low. Watch how devastating this is when putting together targets. Okay, defense first. Go ahead, plot your stops. You know this is you know you're probably off to the races. I hate to say that, but I'm a little cocky and a little confident. Stop's going to be right there, because if you get 3-bar reversal, they're not coming back to get you, maybe 5% of the time. Low to the high, okay, where the retracement took place. This is a 382 retracement. I understand that's a 1618 extension to the top side for the target. Watch how this bad boy plays out. I grab the extension tool, I come to the low, I come to the high of the structure, I come back down. This time I'm going to bring on the 1618. I'm changing to the 1618 because a 382 or a 38% retracement equals a 1618 extension. And what do you know? You hit that target. Also, what do you know? Once we're done after that, price action starts to run away and do some other stuff. Trade is complete. This is an absolute killer. So yes, you can look at trading trend lines, but I need you to look at trading trend lines differently. Forget worrying about a bounce, because it's not going to tell you anything. But if we go ahead and fill this in so we can bring it home, our entry would have been right at our entry candle, or our trigger bar after that. Our target would have been the 1618 extension from the low to the high. We're basically playing this pullback, but now you know how to do it the right way, with stops right up under the wick action for pulling off an amazing 7-to-1. If you can get this down, ladies and gentlemen, we will all go laughing to the bank if we can do this over and over and over again. So I should have asked for your like and your thumbs up first before I even got started with this amazing video. Several examples in here. Now you know how this goes. Don't worry about price action hitting a trend line. It's just a myth. It doesn't matter. It doesn't exist. I showed you what you can really do with this. So give me a thumbs up, hit the like button if you appreciate this video, share it with someone one if you know another trader that this can help, and subscribe to the channel if you're not subscribed yet, as we continue to grow out what I consider to be the most amazing, most explosive, most exciting, most fun, most everything trading channel on YouTube. Yes, I gotta toot my own horn, especially when I'm able to come and deliver you guys information like this that no one else is gonna bring to you free on the house. No gurus, no mentorships, no charges, no $10,000, no $60 a month, no none of that. What's that, Discord? No, none of that. Just jump right in, head on over to the Harmonic Trading Academy playlist where we teach this concept here, the 3-bar reversal. Now we've added trend lines, the myth of the trend line, so much more. Can't wait to see you get there. Head on over there, jump in, watch this as many times as you need, because there's so much valuable information right here in this video. That being said, you guys take care of yourself, be safe in the market, and I'll see you on the next video.